It's important that when we say microfinance that we're not just talking about microcredit. People think that microfinance is about giving small loans to poor people who otherwise can't get loans. And while that's a very important aspect of microfinance, we have to start looking at microfinance as something broader, as access to finance. Do people have the ability to save? Do they have the ability to transmit money from one place to the other? Do they have the ability to earn interest or open up bank accounts that they're not currently able to do for a number of reasons? So branchless banking really takes in access to finance issues, and this is where I think it really has the ability to transform the financial access for populations that really haven't had that access up until this point. It's basically using technology and using agents to provide financial services to populations that are often too isolated or too distant or otherwise excluded from the formal financial system. So that's why we have a lot of optimism, a lot of hope in branchless banking models. We've seen it spring up literally all over the world, from Brazil to Indonesia to South Africa and Kenya. We see this as a marriage of technology and need to increase access to finance, and that's producing some very, very interesting results that we need to monitor and support to see eventually what works and what doesn't and why. There are several successful branchless banking models around the world. And when we say successful, we're not necessarily talking that it's been able to produce a profit, which is obviously one aspect of success. But we say successful in that it's able to reach scale, that it's gained the trust of customers. I think one of the most well-known ones, of course, is M-Pesa, which is a product offered by Safaricom in Kenya. And that enables somebody to download or to convert their cash into electronic value that is stored on their mobile telephone, and to send that money via their telephone, usually an SMS text, to somebody else. For example, there is somebody working in the city of Nairobi, and they want to send money to their mother to help support her who lives out on the countryside. He can send that money to his mother via his mobile phone. His mother would have an account, and she also would receive that money. She'd get a text message saying that she's now been credited that amount of money. She would then go to an agent, somebody nearby her community, so she doesn't have to travel very far, and convert that value into cash, and that's how she can get money in a much more convenient, much faster way than she traditionally has. There's more than 6 million customers of M-Pesa today. That's an incredible amount of uptake, considering M-Pesa has only been around for a few years now. And I think that kind of growth is definitely something that attracts the attention not only of practitioners, but also of regulators who say, wow, there's something here, this is really filling a gap here, and how do we regulate this in such a way that it can really have the most beneficial impact for our target audience, as well as meet our needs for security and transparency and consumer protection, as well as anti-money laundering and terrorist financing concerns. That's really the challenge we have today, to create that correct balance. There are a number of obstacles that the branchless banking models are facing, and I think one is regulation. Many of the actors who would like to enter in this field are not banks, and otherwise they are not prudentially regulated institutions like banks or other financial institutions. So, for example, the central bank or the other financial regulator is not used to dealing with non-banks, and so therefore doesn't quite know how to regulate them. If you take, for example, the Philippines, where you had Globe Telecom, who was interested in providing this financial payment services through their mobile phones, the regulator there at first didn't really know what to do. They looked at that and said, but you're a mobile phone company, you're not subject to the same regulations that we have for financial institutions. We don't know what your role is here, and we don't know how to regulate that. But to the credit of the Philippine government, they were actually able to come up with a plan that would allow this Globe Telecom to introduce a product, and that they would monitor that product, they would learn from that product, they gave it certain conditions, and so they took a risk, and I think that risk has really paid off with GCash, which is the electronic money product that Globe introduced. I think that it's been a very impressive consumer uptake there. It's something that consumers really rely on, and it showed that regulators, when they are willing to take risks and are willing to be open to new products within, of course, a certain comfort zone, they are able to show some real benefits to that. So I would have to say that the regulatory obstacles are sometimes the largest one, especially when it comes to non-bank actors. Regulators around the world are increasingly becoming aware of the potential of branchless banking. I think you can't look at the achievements of GCash, for example, or smart money in the Philippines, Wizit in South Africa, M-Pesa in Kenya, the Brazilian agency models. I think regulators at this point are fully aware of the tremendous impact that these kinds of branchless banking models can have on access to finance issues. There's still a couple of obstacles that we're witnessing, though, that even though regulators might be aware of the potential, they might not be entirely comfortable in trying to address that potential. One, non-bank actors are not actors that they're familiar with or they feel comfortable with. Second is that access to finance isn't necessarily the motivation or their mandate for some of these regulators. They might be aware of the potential for access to finance, but first and foremost, many regulators will say, my job is to protect the stability of the financial sector and not necessarily access to finance. And sometimes those two mandates can conflict. And so those are some obstacles that regulators, even regulators who understand the potential of branchless banking, face. Many regulators don't know how to go about regulating this, and they feel as though unless they have 100 pages of regulation outlining absolutely every aspect of branchless banking, whether that be the question of interoperability or non-bank actors or anti-money laundering procedures, they feel as though they can't move without having all of that set in place. And that usually isn't the best way to go. I think where we've seen successful models, the regulators have taken the approach of test and learn, where they say, okay, we're going to open up a special license, certain products can be introduced, but we're going to watch them and we reserve the right to regulate them later. And so they step back a little bit, they see what the problems are, they see how the business model works and develops, and then they introduce regulation accordingly. And that seems to be a better approach. And I think we've seen that play out in several countries around the world where that was the approach taken, from the Philippines elsewhere to now places in Africa that are introducing that wait-and-see model. CGAP identified very early on the potential of branchless banking and has really committed itself to understanding branchless banking, what works, what doesn't, and to help facilitate branchless banking around the world. We have a grant from the Bill and Melinda Gates Foundation that helps fund our work in branchless banking, and it is divided into two areas. The primary area is a technology focus in which we will do research out in the field on branchless banking business models, and we will also support branchless banking innovative models that are being tested that we'd like to see succeed, and we will help those innovative business models take off and monitor and try to learn from each one of their experiences. And there's another component, which is the regulatory component, which I'm taking the lead on, and that is to understand what regulatory environment is needed to allow branchless banking to succeed. And the real challenge in the regulation of branchless banking is that it impacts several legal regulatory domains, everywhere from banking to anti-money laundering to mobile telephony to technology to consumer protection, and trying to harmonize all those different regulations and those regulatory domains to produce a cohesive regulatory framework that allows branchless banking to succeed is quite a challenge. But that's where CGAP has done a lot of work and a lot of successful work in helping bring about those regulations.